The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. We got action everywhere. We got positive markets with the S&P up by 23 points right now, trading at 4,025. You get the NASDAQ 100 positive by about 33. That's 0.25%. The Dow surging higher by 0.6%. We got banks higher, regional banks higher. That's putting a bid in the Dow. It's putting a bid in the Russell as well. The Russell up 1.2% right now. Interesting, right? A little bit of a reversal of the trend we've been seeing, as in it had been the Dow, the Russell, especially the weakest indices, as you saw banks, regional banks especially getting hit so hard. Today we got some news giving them a lift. We'll see where we go in about 23 minutes on the opening bell. Bitcoin holding up relatively well, right near 28,000, 27,820 right now. We jump over to crude, sitting at about $70, $70.50 right now. How about the action in gold, man? We got some action in notes and bonds. We got some action in yields. We got some action in currencies, and you got some action in gold, man. Gold off more than $50 from where it was Friday. We're off $33 right now in the session, trading at $19.50. Silver's off 25 cents at $23.09. And we jump to notes and bonds. And how about it, man? You're pulling back hard on price. Yields rising yet again. The 10-year right back to 3.5%, man. Quite the run we've had on the 10-year. The 2-year chopping around pretty magnificently as well. Let's take a look. Where are we on the 2-year right now on yields? The 2-year right now sitting at 3.96%. We'll call it 3.96%. Just making sure. Yes. So the 2-year's at about 3.96%, and you got the 10-year at about 3.5%. Boy, you talk about a move, right? Folks, from Wednesday's action, you trade up 3 full points on the 10-year, and we're now back 2 full points. That's from Wednesday, and the market hasn't even opened on Monday. What that tells me, folks, is there is an extreme amount of uncertainty in this market, man. Anybody tells you they know what's happening, you can listen to them. They might have a point. They may be correct, but you can't be sure, man. Nobody can be sure. Everybody's got their hypothesis. Everybody's got their analysis. Everyone's got their bias. But, boy, we got a very volatile period coming at us right now, because who really knows what is going to happen? Let's jump around to some of the headlines, and we'll kick things off with the headline of the morning. First Citizens buys Silicon Valley Bank after a run on the lender, to put it lightly. So, First Citizens assumes $56 billion in deposits, $72 billion in loans. The FTC says it's going to be about a $20 billion failure. Now, that's a lot of billions. That's a lot of millions, okay? But to put things lightly, what do they have in deposits? $200 billion, something like that. So that means, in theory, okay, and I'm not sure this is how it would have worked out if they didn't find a bidder and et cetera, but as you can see, it's a $20 billion failure. The bank had $200 billion in assets. So as of right now, you could have seen depositors potentially get back about 90 cents on the dollar. So not a catastrophic failure, right? To the tune of companies like Roku, I keep bringing them up, man, because they should live in infamy of putting $500 million in a bank that's got massive losses on its balance sheet. They only would have lost $50 million for a company like that. That is the argument on the other side when you talk about, the moral hazard, et cetera, that goes on. Roku's getting a lift with the market this morning. Not sure that has anything to do with this, because they were already getting their money back. But I just wanted to bring up real quick, okay, you jump over to the Analyze tab on the Thinkorswim platform. You jump down to the fundamentals. Roku, as of the price action right now, is an $8.737 billion company. That's $8.737 billion. Well, if they were responsible for the $50 million that they would have lost, they would have been worth $8.687 billion, still rounded up to 8.7. Interesting to think about when you hear all the talk, and you heard it, man. You heard Ackman out there, right? You heard all the Silicon Valley, and there's a point to be said, as in you collapse there, it's going to hurt the growth sector of the country, okay? There are reasonable arguments to be made, but just remember, okay, the voices of the people that were involved in those companies talking about how it was going to be, a complete collapse of everything if they were allowed to go BK. They would have gotten back some of that money. They would have gotten back a majority of that money. It wouldn't have been a complete failure. Companies probably would have been okay unless they had mismanaged their risk. And if they had mismanaged their risk, they would have paid the penalty, which usually happens. Okay, so nonetheless, you got them trading higher this morning. And on that news, you got banks trading higher in a big way, man. We jump over to First Republic. So the thought is, if they can find a bidder for Silicon Valley Bank, maybe that's going to give them the ability to find a bidder for First Republic. And you also have more lending out there as well. Let's see what some of the headlines out there. Yeah, it has a lot to do, of course, with the transaction for Silicon Valley Bank. But I believe you also got just, either way, all the banks are going to catch a bid, man, especially the ones in trouble when you get that as they're facilitating that loss. You got PacWest trading higher by about $1. That's a 10% pop. You jump over to the big banks, JP Morgan right now, up by what, $2? That's a lift, man. That's 1.5%. You jump over to Goldman, up to 318 right now. Bank of America shares trading up from 27 to almost 28. Wells Fargo shares trading from 36.23 to 37. It's going to be an interesting one, though, man. I mean, and Notes says it all, okay? Notes, 2-year, 30-year, 10-year. It says it all, folks, okay? Let's put this back to a daily. We've caught quite a bounce. From 110 and change up to 117 was the price point as of the high of Friday. We're back to 115. You got the 10-year right now, what did I say, 3.5%? Yeah, the 2-year pushing about 4% right now. But just on a fundamental aspect, right? Try and walk yourself through. Okay, so what has changed since Chairman Powell made his speech like almost 3 weeks ago now in front of Congress, his semi-annual appearance in front of the Senate and the House? At that time, he was focused on inflation. He was focused on his mandates, which are price stability and full employment, okay? He also has to make sure the banking sector does not collapse. You can keep that in mind. You can't have the banking sector collapse, folks. And I don't think it's collapsing right now. It may have the fundamentals, and we're going to, right after this first break, man, I'm going to walk you through an article in the Journal that talks about 12 charts, and boy, it's a little bit alarming, okay, to see where we are in the banks, to see the fact, now we get CPI this week, okay, do we, right, this week? Is that right? Man, I might be flying. Maybe that's next week. Maybe somebody in the den can help me. I thought I heard it was this week, right? But how does that make sense? Today's the last week of the March. I'll pull it up. Point being, the only what's happening in notes and bonds right now, okay, we'll pull up the 2-year in particular, just mammoth moves in the 2-year for a short duration like a 2-year to see this type of price action. Okay. I mean, what did we just go in yields? I'll pull it up. Did we just go from like 5% to 3.5? What were we at the highs? We were approaching that level, right? So what does that mean? What that means is that the market is thinking the Fed is going to be pushed into a corner where they're going to have to start cutting dramatically, because you're talking about a 2-year yield dropping dramatically. Well, if the 2 years dropping that quick, then that means we got cuts coming quicker than we all think, maybe in the next year. Where does inflation go on this, folks? Okay, because the total thought of this is that the Fed has started to see things break. They're not going to be able to go as high as the market anticipated. The chairman has said they're going to stay high for long. Market doesn't quite believe that. I don't believe that this is going to squash inflation, folks. So you're going to see that play out. You're going to see a period of extreme volatility in both directions, I imagine, because keep front and center how persistent inflation has been, services sector, etc. I just don't see it happening. That's my opinion. That's my bias. I could be wrong, but we'll see it play out in the next year or two. We'll be right back over some of those charts from the Journal. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
All right, folks, we got the S&Ps right now up by about 28 points. I'm going to put a couple price points on this chart right now. Let's jump over to the SPY before we get to these charts from the journal. I mean, if you're looking for action in this market, folks, to the short side, it's a decent area. I've been talking about in my newsletter, 618s are everywhere in this market on the bullish and bearish side. And now that is a 618 from the original drop that you had from 402. Now this is last Wednesday, okay? Down to, that was Fed day, 392. You got right back to the 618 before you rolled over the next day. Quite a surge higher from the market. Now I'm going to take this off. Okay, I'm going to do a couple things here. This is the SPY again. Things. I talked about this last week, right? You can set areas on your chart because what are you using? Let's say you're just trading the S&P, and man, you can just trade equities. Okay, you can trade individual equities. You could trade notes and bonds right now. Let's just say you're trading the S&P. Are you trading the futures or the SPY? Because the Fibonacci levels line up slightly differently when you consider some of the moves that you've had in each of them. That's just how it happens, okay? Now, the SPY, we're going to take a Fibonacci number from the spike high of last Wednesday. Yeah, you go all the way down to the lows, okay? Now, that brings you back to where you're above the 618 of the full move. But let's say that we go from where we were on Thursday, okay? I'm looking for areas here. Number one, you're talking about an area. What if we just challenge the area of Thursday? Okay, that could be an area that you're looking for resistance. It was resistance on Thursday, man. You rolled over from 398 to almost 390 in the middle of the day on Thursday. Well, what's so cool here, folks, right? Just take where you were coming into the open on Friday. We're going to take a Fibonacci number on that retracement. Okay, and look where the 1 to 1.618 run ends. 398.96. Where did we get to? 399.29. Right up against that area, man. I mean, you know, doesn't mean this king can't explode higher. Okay, this may take a lot longer than we think to roll over this market. Today may be an exuberant day. They just found a bidder for Silicon Valley Bank on a fundamental basis for the banking crisis. That's good news, man. But it doesn't address anything that we've been dealing with for the last 15 months. Fed started hiking over a year ago. Over a year ago, they started hiking. We've been dealing with inflation. We're still dealing with inflation. So just because we squashed the banking crisis, the market's all exuberant. But that should only be deserved exuberance if the banking crisis itself is going to solve inflation. So that's where my brain goes, hold on a second, right? I don't think that the banking crisis, it's going to have an impact left and right, okay? But I don't think it's going to have an impact that's going to squash inflation. And, man, we're going to get a lot of data coming up. We have a Fed meeting May 2nd and 3rd, I think. It's about 6 weeks, 5 to 6 weeks in between meetings, folks, for the Fed. So the next meeting we get, May 2nd and 3rd, I believe. Let's pull up the calendar and make sure, because it's going to be a Tuesday and Wednesday. It's either the 1st and 2nd or the 2nd and 3rd. 2nd and 3rd, there it is with the meeting. 2nd and 3rd announcement on the 3rd, Wednesday at 2 p.m. Eastern time as usual, 2:30 press conference to follow. The point being there, we are only going to get March data in between now and then, right? But guess how much data we get between the May meeting, which is May 2nd and 3rd, and the April meeting, which might be 13th and 14th, okay? We're going to get 2 months of data before that one. So where's this market going to be, man, as we come into the June 13th and 14th meeting, because you're going to get all the data for April in May, and you're going to get a lot of the May data in April before you hit the middle of the month for that Fed meeting. So we get 3 months of data before the next 2 meetings, but you get 1 month before the May meeting, and you get 2 before the April. And what happens if the market doesn't see what it wants to see? As in, you're going to see some violent rips in the 2-year, man. If the market figures out real quickly that, hold on a second, Chairman Powell said we're going to be higher for longer, that 2-year does not match up with where they say interest rates are going to be, folks, on the Fed dot plot going out 2 years. It's not even close. Well, we've had a reckoning with that a couple times already, and it would be surprising, to say the least, in my opinion, if this banking crisis, and is it a banking crisis, if it really had an impact. All right, it's a great segue to some of these charts, okay, because the banking crisis is real in terms of unrealized losses on their balance sheet, man. This is where, folks, you see that, you know, technicals are great. I'm talking about 618s when I'm trading, especially short term. I'm trading a lot on technicals, okay, because you're trading on fundamentals any given day. Who's saying who goes where on a given day when your fundamentals play out over 1, 2, 3, 5 years, maybe, when you talk about fundamentals defining the price value of a company within the market, but technicals, right? But check out the fundamentals, because this is on a bearish side, right? What happens if we're dealing with inflation? What happens if the Fed does have to go higher? Well, these charts all get dramatically worse, okay? That's part of what's happening here. Market value, we're going to kick it off. Where the financial risk lies in 12 charts. This out there from the journal, yesterday morning. I was reading this yesterday, and I got to make sure I find that for the show tomorrow. Market value of securities as a percentage of cost. Do you see the drop-off, folks? This goes back to 2002. The market value of securities as a percentage of cost. This is from the FDIC, Consolidated Reports of Condition and Income. The market value of what they paid is 90% across the board. Staggering, okay? But look at what they did. They locked in long-term duration at this point in their charts of the federal funds effective rate. Now, this is the chart that's been glaring. You may have seen it before. Unrealized gains and losses on select securities. Now, they break down different categories, okay? Nonetheless, it's really not important, the categories. What's important is whether they're above the line or below the line. In terms of, you have Silicon Valley Bank on the left. You got all banks on the right. Silicon Valley Bank, all banks. They're basically identical, okay? Except for the fact that Silicon Valley Bank had about $18 billion in unrealized losses, and all the banks combined are dealing with over $500 billion in unrealized losses on their books. That's not good in general. Okay? Not good in general. And they have all those losses, but they're rolling over from profits, right? I mean, the big banks, all the banks had $100 billion plus in unrealized profits sitting on their balance sheet that they had not marked to market. Well, you see where we go from there. Now, uninsured deposits are the, what is, I feel like they should use more differential colors in some of these charts, right? They use different shades of the same color. Nonetheless, we got a light brown and a dark brown, whatever you want to call it. Uninsured's on the bottom. In 2010, what'd you have? $2 billion of uninsured bank deposit, $2 trillion, $trillion. Now the market is pushing where you got almost $8 trillion of uninsured deposits. Who's dealing with a bank with uninsured deposits unless you're at one of the big four or something like that? Because they're not going to let, Bank of America, Go BK, and depositor funds go out of business. They're not going to let it happen, folks, okay? Banks' mortgage investments, okay? Mortgage-backed securities and commercial. Well, you see the run-up, man. From $2 trillion, you're above $3 trillion. Now, things start to get a little bit more spicy. U.S. office vacancy rate. Commercial real estate risks are rising. Well, one of the things they hold up in this one, commercial mortgage-backed securities. Yeah, you're talking about $500 billion in terms of where they are. Those are going to start losing value at the same time. We're going to finish this up, man. We'll take a look at some of it because you got to keep this stuff in mind, especially if the Fed has to go higher, which is possible. Stay tuned, folks. We'll be back for the opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
back, folks. We've got markets open. You got an S&P up by 0.2%, trading it up 26 points, 4,027. NASDAQ actually lagging today. You got the banks, you got regional banks, not a member of the NASDAQ 100, right? NASDAQ 100 up by only 0.1, maybe 0.2, up 20 points. Dow up 0.8%. Russell up 1.1%. We jump over to gold. Gold off $34 at $19.50, pretty much where we kicked off the show. And we check out notes and bonds right now. Yeah, same deal. These are 15-minute bars. So since about 8:30 a.m. this morning, we've been chopping around at about 115.05 on the 10-year right now. And jumping back to some of those charts I was taking a look at, the last couple to finish up with, okay? They talk about banks' exposure could be multifaceted, and that's what we're talking about here. When you're talking about commercial real estate risks arising, okay, U.S. office vacancy rate. Yeah. Decline, back to above where you were in 2010. Newly built and occupied office space. Just massive disruptions here. Newly built office space, folks, yeah, versus net office space absorption. They're not absorbing any of it. The new built is in the blue. What actual space is being absorbed is in the tan, and you got massive negative numbers. And those are talking about million square feet is what they're talking about. Now, as they point out, the bank's exposure could be multifaceted, okay? Landlords obviously take out loans to purchase properties. The banks, small banks hold $2.3 trillion in commercial real estate debt. 80% of commercial mortgages held by banks. So you got the combination of lower operating income generated by the office properties and a higher cost of financing, if they persist, would be expected to reduce valuations for these properties over time. That's putting it lightly. At the end of last year, banks held $17.5 trillion in loans and securities, while equity in the banking system was more than $2 trillion. That's FDIC data. Estimated unrealized losses on total bank credit reached $1.7 trillion, according to a recent paper by NYU professor Philip Schnabel and co-authors. Now, the last part of this kicker is who really knows what's going on. That's what we'll call it. Shadow banking issues are hard to quantify. Risks could lurk elsewhere. You have private equity firms. They often raise funds or borrow cash to buy assets such as companies and real estate. They can offer investors higher returns by making risky bets that could get more expensive. On the positive side, no one mistake, these investments are for insured bank deposits, okay? On the negative side, private equity and private debt are black holes in the financial system. Total assets under management for private markets reached $11.7 trillion in June. That's according to McKinsey. Private equity firms have raised record amounts of cash in recent years, announced nearly $730 billion in investments, according to Ernst & Young. You see the run-up, okay? This is by year. Private equity fundraising by year. You back it up to 2004, folks, and we were talking about less than 100 billion, maybe 120. You ramp it up until you come into 2008, right? 2008 didn't even get back to 2004, and it's been a one-way trip up all the way up until 2002, where you came in at almost $500 billion. And then you have the transactions as well, and this is going by quarter, okay? So you can see the last 2 quarters dropping off there as things have dried up, but who really knows what's going on in that market, where losses are in that market, right? Yeah, where the losses are, as if those assets are not declining rapidly, okay? That will be a hurt-on thing, but the one thing that makes it so interesting is that the pockets of inflation that are persisting may not be clobbered, okay? They're going to be impacted, but they have to be clobbered, man. We got some numbers that were spiking. They were actually going back up. We were back on the uptrend, right? We're so used to numbers on the monthly basis up 0.4. Right, CPI, 0.4 on a monthly basis, maybe 0.3, maybe 0.5. Folks, if you want to get to 2% inflation, you need a number on a monthly basis that's barely up, what? I have to like compound my head to do what 2% is 2%, like 0.2%, right? Less than that. It has to be less than 0.2%. Okay, on a monthly basis. We're just so far from that. 0.2% on a monthly basis, man, when you got companies going up 5, 10, 15, 25%. It seems like, things that you order every 3 or 6 months. I'll tell you, one thing, I order protein powder, okay, off of Amazon. And boy, I'm going to get this. You know what? I'll see if I can even do it right now because I got time while I walk you through it, okay? Before the pandemic, now protein powder, because of the cost of milk, in particular protein powder, I know that has specifically going up dramatically, the cost of that. But prior to the pandemic, okay, let's see what we got here. Oh, this is interesting. hey, I'll give you the whole deal here, okay? Let me see if I can pull this up. So I would buy a big tub of protein powder, trying to be healthy, folks. Yeah, interesting. You see how many times you purchase this stuff exactly. Okay, let me pull this up. So perfect. Hold on one second. Making sure I don't have too much of my data up on the screen. A pretty large tub of protein powder was $60 prior to the pandemic, and this tub went up to $75 originally, which is a 25% hike, folks. From 60 to 75 is a 25% hike this thing went. So it went up to 75 first, and then it went up to 85. Yeah, so it is now $85 is what this costs. Now, remarkably, it's on sale right now, man. It's on sale. Let me see if I back this up for, list price $85.99. You see that? And it's at $60. Well, maybe they're going back to, I just think that's a sale going on, because look at the one they have comparably at 92. So the point was going to be, folks, we need to have 2% inflation, and meanwhile, I'm still dealing with items. When I pull them up, I was already adjusting to the fact that that went from 60 to 75. Now I got to adjust to the fact it just went from 75 to 85. I mean, what is that? That's almost a 15% hike on top of a 25% hike compounded. Is that what it is? What's 10 divided by 75? Let's see. 10 divided by 10 divided by 75. Whoops, excuse me. What is that now? Yeah, 13.33% repeating. So you got a 25% hike, and then you got a 13.3% hike compounded. But it's back on sale today for $60. Maybe that's a nice thing. We will see, folks. But watch the notes and bonds, because anytime we're getting this type of volatility, man, it's just nobody knows what's happening. I can't remember this type of volatility anytime recently, to put it lightly. All right, let's see how some of those banks are trading. You got First Republic catching a lift as a little bit of light at the end of the tunnel, potentially up 25% right now, up $3.11. All I'll say is, folks, you're only back to last Wednesday, and this stock just traded basically down from 16.38, the high on the open. We've been open for 7 minutes, and already you're down almost $1 from that spike high of 16.38 to 15.54. It's going to be an interesting week in the markets, as they say. All right, let's jump around to some of the equities that we had moving as well. So Pinterest got an upgrade. We'll jump over to them. First Citizens, they're the one that is buying FCNCA. Let's pull them up. They're catching a big lift as they get the assets. Yeah, there you go. Up by 45% for First Citizens bank shares to 844 from 600. What else? Caterpillar gets a downgrade. I saw that. Lots of upgrades, downgrades. KeyCorp. Yeah, seeing what else. All right, we'll come back, folks. We'll take a look at some of the articles I pulled up, see what we have going on this week. We got markets holding up relatively well, but a little bit of a sell-off on the open. We got the S&P right now trading at 4,022, up by 21 points. Stay tuned, folks. Be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open.
to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we get the S&P right now up by 27 points, trading at 4,027. We made a high coming into the opening bell pre-market at about 7:45 a.m. this morning of about 4,033. Jump back to another article out there from Bloomberg. And so it's interesting, right? I showed you the 12-star charts. That was from the Journal. This one is from Bloomberg yesterday morning. Banking crisis raises concerns about hidden leverage in the system. This is talking about the shadow banking system, which is what we ended, right? The article for the Journal, which is where that is, okay? Now check out some of what they're talking about. And it's similar action, just portrayed in a little bit of a different way. Talking about the next bout of volatility will come from some watchdogs think the answer may be buried in the huge pile of hidden leverage that's been quietly building over the past decade. The concern is that private equity firms and others were allowed to load up on cheap loans as banking regulations tightened after the global financial crisis without enough oversight into how the debt could be interconnected. Though each loan may be small, they have often been layered up in such a way that investors and borrowers could suffer if banks or other credit providers suddenly pull back. A slight downturn and an increase in interest rates will make some corporates default. This puts their private debt providers in trouble, and then the bank that provides leverage to the fund in trouble. Down the chain we go, man. Now, they got a chart in here. You don't really need to understand it, but that's just talking about you got shadowed lenders. They're adding leverage into that go into the company. Okay, now, the chart I want to get to, though, is that, and this is a little bit about what the Journal talked about, but I like the way that they do it. Assets held by financial institutions without a banking license. Folks, if that doesn't wake you up, man, you know, you go from 50 trillion up to 250 trillion, and meanwhile, what's been the interest rate over a majority of that time? Whew, it's been a low one, man, okay? And it's been at its lowest point coming into some of the biggest numbers ever in terms of assets held by financial institutions that have no banking license, so therefore they are not under the same type of regulation. I imagine this is to some degree some of the concern going on in terms of why they want to backstop everything, because we went over some of the numbers. It's as simple as that. All right, let's jump to what else we have going on here. What's this one? Walmart. Yeah, let's talk a little bit of Uber before we do. Jack Ma, that's not, come on. Where did I just go here? There we go, Uber. So Uber, going to be interesting to see how this plays out. They're going to take down thousands of virtual brands, and what they're doing is they're going to stop allowing restaurants to list multiple brands with the same menu. If you recall, what was it? A couple companies in their brilliance, man, during COVID. Chuck E. Cheese They had a different pizza company. Now, they might be able to do that if you're just one brand, but what they're preventing from is the same kitchen, because why wouldn't you do it, right? You got a kitchen. Make 3 different restaurant menus, put them all up on Uber, and meanwhile, you're pumping them all out from the same kitchen. Well, they're going to start trying to prevent that, is what the deal is. They're taking thousands of online-only brands off its app this week out of concern that the platform is getting clogged by restaurants listing multiple delivery options with different names, but the same menu. Pretty cool, right? Why wouldn't you, man? Why wouldn't you have 100 restaurants with different names? You label things slightly differently, maybe add a few different seasonings on your pasta, your chicken carbonara, whatever you want to put on there. So-called virtual brands, delivery businesses without physical storefronts. Yeah, blew up during the pandemic. And let's jump over to Uber. As we get the market positive, pushing up again, 4,030 right now on the S&Ps. You catch a lift. And again, folks, if I was looking for it, man, maybe 4,039 in this market is where I'd be potentially looking to go short. You know, and have a stop in this market, folks, because you saw it last week, okay? The market finished up positive last week. Well, there was an opportunity for 100 points down on Wednesday. There was an opportunity for, 90 points down on Thursday, and there was an opportunity early in the hours pre-market of 60 points. So you got a 100-point move down, a 90-point move down, a 60-point move down, and meanwhile, you got just staggering moves on the upside that finished the week positive. When's the last time we had a 100-point, a 90-point, and a 60-point move down independently S&P within a week and the market finished positive? I don't know. I would love for somebody to look that up, man. I don't know, because it takes some extreme volatility and it takes some extreme bounces. Our man Basil Chapman, he talks about a 2-click day, right? Which is talking about potentially you trade it up, and then boom, right when you're done with your positive trade, you trade it down, or vice versa. You trade the market both ways. You actually get a trade where you're trading it one way, you see the reversal, you got enough volatility, you trade it the other way. I would just make sure you keep your stops in place, folks, because if you catch the move and you got 100 points, or you got 90, or even if you got 40 or 50, right? You give yourself 5 or 10 points maybe, depending on how you scale in as well. But keep your stops in place, man. Don't think you're smarter than this market. Everything I'm putting out right now is my opinion. And I know I can be wrong, so I'm trying to keep my stops in place so that I can catch the moves on when they're dramatic, and so that if I'm wrong, I'm able to take a few losses, whatever it is, because it's just a volatile period. And don't blow yourself up thinking that you got to capture the move today, because we have some time, folks, okay? The volatility I imagine that we're going to see as we come into especially, I mean, you can say the May meeting, depending on how the data goes as we go through April, when we get March's data. But boy, when we got 6 weeks between May 2nd and 3rd, yeah, to June 13th, 14th, I think, is the next meeting. I mean, June 13th, 14th, folks, we're only talking about right now, 2.5 months almost? It's going to be a volatile time, because who really knows? And you're seeing that play out on the 10-year. Because who really knows the impact that what's happening in the economy is going to have on jobs, is going to have on inflation. And then on top of it, who really knows what the Fed is going to be willing to do now as the environment has changed slightly, depending on how those numbers come out and depending on where they need to go with inflation rates, to put it lightly, right? Excuse me. Okay, let's see what else we have going on. So, the Saudi National Bank chairman, yeah, he's out, as he should be probably. He's the one that started the run on Credit Suisse, man. Obviously not astute enough to be in that position, realize the investment they have, and kind of lie tongue-in-cheek when asked if he might invest again. Even if the answer was hell no, he probably shouldn't have said that. And he ruled out that freshman investment. And the stock plummeted. They went out of business, and they lost $1 billion within the span of a couple weeks. So he is out. He's been in that position since 2001, when it was created via a merger with the National Commercial Bank, and Samba Financial Group is leaving due to personal reasons. Yeah, they let him sneak out the back door for some personal reasons. 12 days after he said, 12 days is all it was, man, that he said that. Amazing. Not surprising. We'll jump to another. How about Jack Ma? Yeah, he's not really talking anymore. And just keep that one in mind when you look at China, folks. You want to trade China for some volatility? just be aware it's risk capital because he's one of the biggest celebrities out there, man. Even as leaders voiced unwavering support for the private sector, one of the country's best-known entrepreneurs chose to spend months overseas. He's out of the limelight. I would love to know what he got told by the Chinese power players over there in terms of his rhetoric, his behavior, etc. Yeah. All right, markets, get you to lift. Dow up 280 right now. Russell up by 20. We got crude, 70.59. Gold contract down $35. Let's check out the dollar index right now. Dollar index backing off a bit, under 103, 102.94. One more segment, folks. Stay tuned. It's Monday. We got markets in positive territory. I'll be right back, folks.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. If you were looking for a run with First Republic, well, you got it, but you got it to the downside on the open, man. You just dropped $2 from where this thing was trading on the open. You gave back half of the gains. We were up by 30+%. We're only up by 16% right now. We have seen this play out, folks, okay? So be careful when that was one of the biggest headlines out there, right? Okay, a deal's been facilitated. Now, if First Republic's really in trouble, they have a framework, they have confidence, they could find a buyer. You're only talking about a $20 billion shortfall. Not the most extreme example when they have $200 billion of deposits on their balance sheet. Nonetheless, First Republic gives back $2 just like that. And $2, folks, is like a 15% pullback from the open. 15%. This just traded down from the open. you're going to see volatility persist, to say the least. Yeah, so what else were we talking about? Well, Pinterest, they were talking about is moving in the den. They got an upgrade from UBS. Jump over to Pinterest. They talk about that their advertising may improve things to the tune of 25% potentially going up. And what else are we going to talk about? How about the Final Four, man? Didn't get to watch a lot of it this year, but I did watch some of the games to make it into the Final Four. And, man, pretty cool to see some of those lower-seeded teams really come through in the clutch and make it. And, boy, you got some three of the companies, Miami, San Diego State, and Florida Atlantic, the first time they're making it to the Final Four. That's exciting times, man. UConn hasn't been there since, I think, 2013 or 2014, which is the last time they won it. So, yeah, it's going to be an interesting matchup. And it's just basketball, man. College basketball. I mean, you had the overall number 1 seed, Alabama, going down. They shot 3 for 27 from the three-point line. It's one of those games, man. You run hot, you run cold, and boom, their season's over just like that. 3 out of 27. That's not very good shooting behind the three-point line, especially if you want to be a national champion, right? All right, folks, we got the markets holding up relatively well right now. We get the S&Ps up by 26, pretty much where we kick things off on the program in terms of that chop area that we've had since about 7 in the morning. Keep your eye on that gold contract, trading a little bit lower. We got the dollar index. We'll wrap it up at 102.93, and let's finish off the program with the 10-year, man. As, yeah, you're basically making lows right now as the 10-year continuing to rise. A little bit of a reversal of the trend we saw last week. We're now approaching a 114 handle. Stay tuned, folks. Basil Chapman's up next. I'll see you tomorrow. Have a great Monday, everybody.